The Federal Reserve Bank just cut interest rates by 0.25% one day after Donald Trump was elected president. And the reason why this is interesting is because Jerome Powell, who was the chairman of the Federal Reserve Bank, said that if Donald Trump asks him to step down and resign, he would refuse. And the reason why that's interesting is because Donald Trump is the one that hired Jerome Powell back in 2018 when he was president last. So I want to break this all down. I want to start by talking about what the Federal Reserve Bank said yesterday in their most recent meeting, and then I want to go over the power dynamic that we'll probably be seeing between the president and the Federal Reserve Bank. So let's break this all down. And I want to start with what I said yesterday, which is if you are a long-term investor and you're investing in long-term ETFs, mutual funds, and index funds, what's happening with the most recent election cycle does not matter. In fact, none of this day-to-day stuff matters because you're just investing your money for the long term and you should not worry about what's happening in the White House and everything in between. However, the shifts that happen in the White House and a new presidency can change where the government is spending their money. Those government shifts can create some unique investment opportunities, but those are for the more sophisticated investors that want to understand how these government shifts can impact certain sectors and certain industries, because we know that Donald Trump has been talking about deregulating oil and gas. He's been talking about deregulating the financial service industries. He's been talking about investing in the military and aerospace industries. So, if you are a long-term investor and you're just investing in ETFs, index funds, and mutual funds for the long term, none of this stuff matters. But for those of you that want to invest in individual companies or you want to be a little bit more involved with their investments, that's where you can pay attention to these types of government shifts, but make sure you still have a long-term mindset ahead. Now, I am hosting a live workshop on November 19th at 10:30 a.m. Eastern Standard Time, where I'm going to be going over the new government shifts that you can expect under a Trump presidency. I'm going to be breaking down the policies that Trump has talked about, how they're going to impact the economy, which stocks, which industries, which sectors could potentially benefit. If you'd like to join, it's completely free. But again, this is only for those of you investors that are already investing in the markets and want a little bit more sophisticated analysis. So if you'd like to join me on this free workshop, it's on November 19th at 10:30 a.m. Eastern Standard Time, and I have the link for you to join down in the description below. So the Federal Reserve Bank cut interest rates by 0.25%, and the reason why Jerome Powell said that they feel comfortable cutting interest rates is because, number one, inflation has been moving down towards their 2% target. Has it hit 2%? No, but they say it's on target to hit 2%. Number two, he talked about the economy. He said that the GDP, our economy, grew at a 2.8% annualized rate in the third quarter, which means the economy is still booming. And then he talked about the job market. He said that the labor market is still solid. In fact, he said that although we have seen payroll job gains slowing, and although we have seen wage growth easing, the unemployment market is still strong. We have 4.1% unemployment today. It's a little bit higher than where we were a year ago, but it's been falling over the last few months. And 4.1% unemployment is still historically some of the lowest unemployment we have seen in the history of time. The problem with that 4.1% unemployment number, this is just me to you, this is not what Jerome Powell said, is that the problem with the 4.1% unemployment number is it doesn't give you the full picture, because it doesn't show you the people that have been unemployed for so long that they no longer qualify for unemployment. And the second problem with that is it doesn't show you the people that are working two jobs or that are underemployed, because that doesn't show up in this figure. And we know that a lot of Americans today feel like they are underemployed or not happy at their current workplace. That's where you want to take the unemployment numbers with a grain of salt. But beyond that, one of the things that Jerome Powell emphasized is that consumer spending has been extremely strong in America. And that's why our economy is booming. And that's why he's confident that cutting interest rates is a good decision. Now, remember, our economic system runs on spending. The more money you spend, the more money somebody else makes. That's what keeps the economic machine moving. But the problem with that machine is, for many Americans, the spending is fueled through debt. And of course, we know that credit card debt has been repeatedly breaking a new record high almost every single month after month. It's pretty much a system now where you get the news that credit card debt has broken a new record high. We're seeing auto loan delinquencies rise. We know that the average American has more debt than ever before. But the lower interest rates are supposed to help stimulate spending. Not because people will have more cash in their bank account, but because borrowing money should hopefully become a little bit cheaper. But it's not that simple. Because your interest rate that you pay on your mortgage rate, the interest rate that you pay on your credit card rate, the interest rate that you pay on your car loan rate, doesn't just depend on what the Federal Reserve Bank sets. It also depends on what's known as the 10-year Treasury yield. And we actually saw over the last few days after the Trump presidency is that the 10-year Treasury yield has risen. This is why I've been talking about for the last week and a half now, which is even though the Federal Reserve Bank will probably cut interest rates, which we know that they just did, it might not make a big dip in mortgage rates or car loan rates unless the 10-year yield falls. And so far, we haven't seen that big break in the 10-year yield. But if you have money in a high-yield savings account, chances are that you're probably going to get an email from your bank saying, hey, just wanted to let you know that we have adjusted the interest rate that we pay on our high-yield savings account, and that yield is probably going to fall. And this brings us now to what is the Federal Reserve Bank going to do next? And this was the key piece of data that everybody was listening to the Federal Reserve Bank about, because everybody knew that the Fed was going to cut interest rates by 0.25%. The markets had factored in a 99% chance that the Fed was going to cut interest rates by 0.25%, and they did exactly that. But the key piece of information that everybody on Wall Street was waiting for is, what is the Federal Reserve Bank going to do next? And what Jerome Powell said, he was pressed on this by a number of people, is what's coming next is we don't know. We are going to wait until December before we give you any further data, because they're waiting on more inflation data and more economic data. So it was a little bit of a letdown to everybody, because everybody was hoping that Jerome Powell would say something on how many more interest rate cuts can we expect? How aggressive is the Fed going to be to stimulate the economy? How aggressive is the Fed going to be to stimulate markets? And he gave essentially no indication besides, we're going to watch it and let you know in December. So that's that. But I want to switch gears now and talk about, what does this new presidency, the new Trump presidency, mean for the Federal Reserve Bank? What does it mean for the economy? Because on one hand, Donald Trump has been very vocal that he wants to cut interest rates. On the second hand, we have the Federal Reserve Bank, which, although they're called the Federal Reserve Bank, they're technically not federal. They're not a reserve and they're not a bank. But that being said, Jerome Powell, who is the chairman of the Federal Reserve Bank, was hired by none other than Donald Trump. And now you can start to see where the friction starts to lie, because Donald Trump and Jerome Powell have been butting heads recently. And the reason why is because Jerome Powell may not want to follow the same agenda that Donald Trump has. And that's why Jerome Powell was asked, if Donald Trump asks you to resign, would you resign? And he said no. And what Jerome Powell said is that Donald Trump doesn't have the authority or the power to fire me. Jerome Powell, who is the chairman of the Federal Reserve Bank, because remember, the Federal Reserve Bank is supposed to be separate. Now, this is where things get a little bit tricky, because it's supposed to be separate, but the government has a lot of influence over the Federal Reserve Bank. And there may be loopholes that if Donald Trump really wants to get Jerome Powell removed, there may be ways to do that. And Jerome Powell's term is expiring in 2026. And this is where, if Donald Trump wanted, he could just not renew Jerome Powell's contract to continue running the Federal Reserve Bank. So there's a lot of questions here. And the first point that I want to make sure you understand is that although it's called the Federal Reserve Bank, it is not a part of the federal government. It is supposed to be a separate and independent entity. This is why Jerome Powell said that he is not going to change his policy decisions based off of who is in office. But he did give a little caveat with that, which is, I am not going to change our policy decisions based off of who is in the White House, but the election will have an impact on policy decisions. And those policy decisions can have an impact on the economy. And those impacts in the economy can then impact what the Federal Reserve Bank does. So what is he alluding to? Jerome Powell essentially said that if Donald Trump puts the economy into a recession, then maybe Jerome Powell will have to change how aggressively he's cutting interest rates in order to combat the recession. Likewise, if Donald Trump turns the economy into a very strong, boomy economy, maybe Jerome Powell will stop cutting interest rates. But this is then back to that conundrum that Donald Trump says that he wants to cut interest rates. And so in order, based off of what we have here, in order for the Fed to cut interest rates more aggressively, Jerome Powell is essentially saying he wants to see a worse off economy. But of course, Donald Trump doesn't want a worse off economy. Donald Trump wants a better economy and lower interest rates. Jerome Powell is saying no. And Donald Trump, through the standard process, cannot fire the Federal Reserve Bank chairman that easily. And so this is where it's going to be a very interesting dilemma that we see in 2025 as to what is going to happen. What's going to happen with the economy? Is the Federal Reserve Bank going to cut interest rates fast enough to meet Donald Trump's needs? And what is Donald Trump going to do to pressure the Federal Reserve Bank to meet his needs? And of course, if Donald Trump can't make any changes in the Federal Reserve Bank, then we know that when 2026 rolls around, Jerome Powell may no longer keep his job if Donald Trump is not happy with the performance of Jerome Powell. It's a very unique situation because Donald Trump was the one that hired Jerome Powell in the first place, and now they're not as close of friends as they were before. But this is where, again, if you are a long-term investor, this is just political entertainment. But if you want to understand the government shifts that are happening, this is where you can find some unique investment opportunities if you are willing to take on those risks and do that additional research and digging. And of course, I'm hosting a live workshop on November 19th at 10:30 a.m. Eastern Standard Time. So if you'd like to join me, I got that link for you down in the description.